Hey guys, Boris Session Week 4, welcome to our fourth day techniques for 11/26/13. As always, trading foreign exchange or margin carries a high level risk and suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks of trading margin, but to seek advice from an financial advisor if you have any doubts. Well, let's take a look at the euro today, mainly because it was just, I think, really trapped in a very tight range. But the key thing with the euro is that from a technical point of view, it still preserves its upside momentum for the time being. Did not break the lows today. Basically, it was a very tight range. We peaked above the highs, couldn't quite make it. 35.50 is still pretty much a resistance level, but if we can clear that, the next level, of course, comes in, which is going to be the 35. Sorry, let me just put this up on the dailies. Um, the next level of resistance, of course, the 36s. So for the time being, we're definitely very chunky between this 35.50, 35.80 level, but preserving the uptrend. And unless we start breaking all the way down below the 34.80s, really below the sort of the 34.50 is kind of really the true support level here. So 34.50 and above still preserves the uptrend. 35.50 and above, they can take itself out, prolongs the uptrend, and puts us on the path towards the 3600s. If we can take out the 3600s, then the next level is only 3650. So it's just there's actually quite a lot of momentum here behind the euro to take up a little further upside action. Despite I think a lot of the interesting fundamental aspects of it, it remains relatively resilient, and I think the technicals in this case probably sending a better signal. Dollar yen flamed out a little bit at 102s, not a surprise. But now comes the really interesting part because we've had such a strong rally that the temptation to take some risk off the table, take some profits off the table, and to sort of correct at least to the 101s should be relatively strong. So the fact that we really tested the highs but ended up right around the 105.50s suggests we may be in for a little bit of a reversal. 101 definitely the key support level here. Sort of I think like the 190 if they run the stops. To the top side, we really need to take out the 102s. If we take out the 102s, that really puts us on a path towards the test of the yearly highs right above the 103.50s. So for the time being, it looks like a pause and perhaps even a little bit of a correction. Certainly the fact that we tested the highs and kind of ended up mid-tier, not a very bullish signal. So we'll see if it can recover in the next 24 hours. Cable also corrected today. I corrected pretty severely because it actually took out the day's lows and maybe creating a turn candle at this point. So for now, the 62.30, basically the 62.50 is the very strong resistance level, pretty much a triple top in cable, against which if you're trying to pick tops here, this may not be a bad spot simply because the risk is very defined and relatively limited. To the downside, the first level of support obviously 6100, but really the big level of support is the 6000, and then the really cheap support is the 5900. So we'll see if cable begins to carve out kind of a much more defined triple top as the days go by. But for now, the 6250 is certainly the key resist level. If we come back and retake it, that actually would be an uber bullish sign. That means we would completely engulf today's price action, go to the fresh highs, and then could be on our path towards the 6300s. So a reversal through those levels or for the continuation to the downside, either way, it could be an interesting technical signal as far as that goes. Lastly, Aussie looks like it may have bottomed a little bit here at 9100. We found this is the support we've had all the way from August, kind of held over here, long-term level of support. And so there were buys in front of 9100. They brought it back up. We're now kind of trading very close to the day's highs. That'll be interesting to see if we can push it ourselves up all the way up to through the 92s, maybe to 92.50s as a recovery level. But certainly this looks like a spike bottom candle, and Aussie may have found a little bit of a bid here just for nothing else but short covering. Not too much action. This is obviously a holiday week in the U.S., so trading is going to slow down even further as we go into Wednesday. But for now, we're basically very content holding out to the ranges, but the edges of these ranges could be very interesting in all the pairs. So for the yen, the 102s obviously to the upside, 101s to the downside. For euro, the 3550s to 3500s, and for pound, which is the most interesting of all, the 6250s to the upside, which would be a very big surprise. And more importantly, the break of the 6100s possibly taking us down all the way down to 6000 as we have a full correction in place. That's how it shapes up. Wishing you guys the best of luck, the best of trading support. Schlossberg over now.